How will the Ukraine-Russia war impact Australian property prices? One way to figure this out is to analyze what key global events and crises, how they have impacted Australian property prices in the past. When interest rates have been going up, when inflation has been going up. What can the history of these global crises tell us about what will happen in the next 1 year, 2 years, 3 years in the Australian property market? If you're interested, keep watching. My name's PK and I help people build passive income and wealth through property investment using the Property Investment Accelerator mentoring program, using data without needing a $15,000 buyer's agent every single time. If you're new here, if you're interested in property, all insights related to property and the economy, then give it a subscribe and give it a thumbs up. I'd super appreciate it. Let's go to the first chart. So what you're seeing right here in front of you is the average or median house price for Australian property going all the way back to 1985. And here what CoreLogic have done is that they've mapped the key crises that have happened throughout history and how they have impacted Australian house prices. So Australian house prices are in the blue. You can see here the axis is here. So 10% rise, 20% rise, or the maximum they've fallen is about 7 or 8%. Predominantly led by Sydney, Melbourne. But let's just go through these one by one. Stick with me, because if you truly want to put hundreds of thousands of dollars of your own money in property, you should understand what's going to happen, right? So the first one is the Black Monday share market crash. This happened on October 1987. The Australian share market lost about 25% on the day of the crash. All right, and basically almost 50% by the end of October. But between October 1987 and November 1988, local property values rose. You can see here, they rose by 34%. Okay, and the reason they rose is when stock market crashes, people still need to put their money somewhere. And so they put it to flight to safety type assets like property, bricks and mortar, substantial assets like gold as well, something you can feel and touch and has intrinsic value, not the stock market. All right, so stock market crashes don't lead necessarily to property market crashes. So anyone who says that global financial crises lead to the Australian property market going down, they can learn a thing or two just by looking at this spike here. The next thing is the Gulf War. All right, so it's the Gulf War in 1991, and there was basically a decline of more than 6% in the property market, but that decline or downswing had already started in May 1989, and that's because of sharply rising interest rates. So it's not the first time we're experiencing interest rates that will rise, probably not sharply this time, but at this point they were rising sharply. And so you can see that here prices rose 30%, but they never really dropped. I mean, you can say they went back at the bottom by about 1 or 2%, but then they steadily climbed again, despite there being a huge Gulf War going on in the Middle East. Okay, so take from that what you will. This is really interesting data. The next one is the Asian financial crisis, or the bond crisis, sometimes they say. Once again, stock markets capitulated, people rushed to safer assets like property, and you can see property prices rose consistently around that. Then, of course, the 9/11 attacks, which were just terrible. Property, once again, was considered a safe haven, and prices remained pretty stable, right? I mean, they continued to increase. In fact, if you can see what's happening post-2001, they continue to rise, and they never really went backwards. Don't mistake these downtrends as property prices declining. They're still inclining or increasing, but just at a lower rate. Okay, the Reserve Bank of Australia had completed its fourth rate cut at this point, okay, and rates were now at about 4.75. That seems like, huge numbers compared to what it was now. And that just shows you the stability of the property market in the face of what's arguably the most shocking thing that's happened in global history in the last 50 or so years. And property prices, didn't really go down at all. And I think that's the other thing to say as well. When these crises happen, monetary policy, Reserve Bank, fiscal policy, the government, they do things. Okay, so even if, let's say, this war in Ukraine and Russia, this was to escalate to almost nuclear capability, there would be things that the Australian banks would do so that property doesn't fall. For example, just like in COVID, they said that, okay, if you can't pay back your loan, we'll give you a 6-month holiday. There are things, mechanisms by which we can control, or the government can control, property prices from reducing. Really interesting to note that. And then you have the global financial crisis. Okay, obviously that was in 2007, 2008. Prices slipped by about 7.5%. It's very important that, yes, they did actually go back this time. And the market revival was helped by lower rates, government stimulus, the two things that I've just mentioned, and obviously the mining boom, which just so happens that we're going through right now in Australia as well. And then you've got, of course, COVID-19. The peak to trough fall of property prices was 2%. That was March 2020 to September 2020. And we all know what's happened since that time. Don't mistake this huge boom to be a precursor for a huge bust. You can see there was also a huge boom here and it didn't go bust. Maximum house prices went back 1 or 2%. Now, I fully expect national house prices not to grow at these levels anymore. I expect them to be more sustainable between 4 and 10%. And I think Sydney will continue to drop. It's already experienced its first month of drop, and Melbourne too. All right, so if you're in Sydney, Melbourne, don't buy there now, whether it's a PPR or investment. It's not financial advice, just my thoughts. Rent vest, or if you already have your principal place of residence, just invest somewhere else. For example, like Brisbane, Adelaide, Perth, so many regional markets that will continue to experience 20 to 30% this year. I've already talked about them in previous videos. All right, so that's basically what I wanted to cover in this video. Just once again, there's a lot of scaremongering by banks, by economists. Sometimes we put them on a pedestal to say that, yeah, you guys are the professionals, you know what's going on. But I can tell you, in COVID, banks predicted property prices to go down 30%. In the GFC, they did the same. I don't know what they did in 9/11. I wasn't old enough to know, but I can probably tell you, if you look at internet archives or archives in general, they would have expected prices to come down. So what happens is that, government interferes, central banks interfere, monetary policy changes, fiscal policy changes so that house prices don't drop. Okay, so if you're concerned and if you're putting your property investment or property purchase plans on hold because Russia-Ukraine war, everyone's glued to their screens trying to follow what's going on. Of course, the Western media is saying one thing, Eastern media is saying another thing, who knows what's actually going on. Creates a lot of uncertainty, right? And so you might be pausing your property investment decisions. Just keep in mind that if you're investing in property for a 10, 20, 30-year period to fund your retirement, then you're going to experience many of these crises, okay? And none of these crises have been doomsday for Australian property markets. By now, it's about time in the market, but also time the market, okay? Don't buy in Sydney right now. That would be a little bit silly. Buy somewhere else, lower price point, positive cash flow, growth properties. You'll do incredibly well. I know that's what I'm doing. So hopefully that was useful, guys. Like I know that in the comments, people will have some negativity, because of uncertainty. I completely understand that fully, you have permission to share that. But comment and discuss with your friends and colleagues, with the backdrop or with the mindset of understanding this data, because, data doesn't lie. Hopefully that gave you some confidence. If you want to level up your knowledge and education, just like what I'm teaching you now, I'll leave links below to the Facebook group with more than 13,000 members having these discussions every day. Really professional, really kind, really advanced property investors in there that you can learn off. And my podcast as well, and of course the Property Investment Accelerator. My name's PK, and yeah, I really do hope these kinds of things bring you value. And if they do, then hit subscribe, turn notification bell on, and give it a like. Thanks, guys.